What's up, everyone, and welcome back to the channel. Today, we're diving into a stock that's seen a massive price drop, but is now at the center of a high-stakes bet. We're talking about UnitedHealth Group, ticker symbol UNH. The big question today is, why are some of the smartest, richest investors in the world, we're talking Warren Buffett, Michael Burry, and David Tepper, suddenly buying the stock, and buying it big? Is this a sign of an epic comeback? Or are they walking into a value trap? Stick around because I'm going to break down the shocking news and the fundamental reasons why these billionaires are making this move. I'll also explain why the stock fell so hard in the first place before giving you my personal trading analysis, from my short-term play to my long-term, decades-long conviction. You do not want to miss this. Let's start with the bombshell news that has everyone talking. You know him, you love him, you follow his every move, Warren Buffett. In their latest 13F filing, his company, Berkshire Hathaway, revealed they've purchased over 5 million shares of UnitedHealth. That's a new position worth roughly $1.6 billion. Now, a lot of you might be thinking, why is Buffett buying UNH now? This stock has been under pressure all year, facing a major sell-off due to regulatory investigations and concerns about rising healthcare costs. But wait, it gets crazier. He's not the only one. Famed Big Short investor Michael Burry has also been buying the dip, and so has David Tepper, another titan of the hedge fund world. This isn't just a coincidence. When a group of these super investors all start buying the same stock at the same time, it's a strong signal. It suggests they believe the company's problems are temporary and that the market has overreacted, creating a generational buying opportunity. So, with all these strong fundamentals, you're probably asking yourself, why did the stock fall so massively in the first place? It didn't just happen overnight. It was a perfect storm of bad news that hit the company over the last 2 years. It all started with unexpected increases in medical costs. In their earnings reports, UnitedHealth said that the use of healthcare services, especially in their lucrative Medicare Advantage business, was rising faster than they had anticipated. This directly eats into their profit margins and sent the stock tumbling. At the same time, the company is facing intense regulatory scrutiny. The Department of Justice is reportedly looking into its Medicare Advantage billing practices, which creates a cloud of uncertainty and risk that spooked many institutional investors. And let's not forget about the massive cyber attack on its subsidiary Change Healthcare earlier in the year. This was a huge disruption to the entire U.S. healthcare system and cost UnitedHealth billions of dollars to manage and recover from. So when you put it all together, you could see why a lot of investors panicked and sold off. This is precisely why a value investor like Buffett and a contrarian like Burry are stepping in. They see that these problems are not a fundamental death blow to the business, but rather a short-term overreaction that has created a massive buying opportunity. Now, let's get into the financial numbers you guys asked for and break down the key fundamentals behind this bet. Let's start with the PE ratio. From 2020 to 2023, UNH's PE ratio was consistently high, reflecting strong investor confidence. But for the last 12 months, it has plummeted to a staggering 13.2. This is a huge drop. For a value investor, this is a beautiful thing. It means you're buying a company that has been a long-term winner, but you're getting it at a massive discount. Next, let's talk net profit margin. The company's net profit margin has been incredibly stable, hovering around 6% for years. There was a temporary dip to 3.8% in 2023, which lines up perfectly with the headlines about rising costs. But look at the most recent data. It's already climbing back up to 5.2%. This confirms that the company's core business is fundamentally sound. And finally, for those of you who love income, the current yield is 3.3%. UnitedHealth has a proven track record of consistently growing its dividend, and a yield over 3% for a high-quality blue-chip stock is very attractive. It gives you a steady stream of income while you wait for the stock's valuation to recover. With all that in mind, my personal analysis becomes much clearer. For over 4 years, UNH has been in a long-term bear market, and my short-term trading opportunity was proven right. My trading strategy between $217 and $291 worked out perfectly. With the recent news and the huge pump that we saw on Friday, the stock is now around $300. Now, here's my verdict and my personal price targets. I will not support this stock at my next price target, which is the range between $343 and $444. After we reach that price point, I fully expect a massive sell-off that could send the stock under $200. However, my long-term conviction is very different. After we see that final move and the bear market comes to an end, I am extremely bullish. This stock is a decades-long investment. You should hold it for over 20 years. I believe that because of its huge undervaluation as a big value title, it will eventually see new all-time highs. So, what do you think? Are you with Buffett and Burry on this one? Or do you think they're making a mistake? Drop a comment below and let me know your thoughts on UNH. And if you want to see my next video where I break down my exact trade strategy for the coming months, make sure to like this video, subscribe to the channel, and turn on notifications so you don't miss my next video.